Hello, everyone, and welcome to TradeFinder Live. My name is Zach. It's great to be back with you all, especially during trading hours. I love this new format that we have versus when we used to do it after hours. We can actually now implement all of the topics and material discussed in this webinar into our live trading session right after the webinar is over. So again, welcome. Great to be back with you all. First and foremost is our disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. Please feel free to read this in detail at your leisure, or feel free to take a screenshot of it now if you like, but that's the main point to take away from it. Other than that, it's almost time to get into the good stuff. First, though, I have to ask, the market continues to consolidate to break out, the breakout from last week, rather, and it seems as all eyes are on NVIDIA's earnings tomorrow. That's one of my favorites, as Rob knows, and I'm very excited to hear Rob's thoughts as to what we have to expect for that and how it'll impact the market for this week. So without further ado, the man of the hour, Mr. Rob Roy.
Hi, everyone. Welcome to this week's TradeFinder Live. Good to see you, Zach. Happy Tuesday to everybody. Let's take a quick look at the market. And as you mentioned, Zach, we've just been consolidating that move that occurred to break above the wave 3 high after last week's CPI report. This is actually not that bad. It's good constructive consolidation following a breakout move. If I put the moving averages on, you can see that we had gotten just a little bit of separation from the 10-day moving average. So this sideways consolidation is allowing the 10-day moving average to catch up. That's what you want if we're going to get a continued move higher up to, as a reminder, where that C-wave extension is on the zigzag. Just a note, some people had asked in the U.S. market update. If you haven't watched the U.S. market update, I encourage you to go do so. Over here is where the wave 5 target is. So some people noted, I didn't see your wave 5 target. Well, that's because it's way over here towards the end of September, October, right in front of the election. So I just don't think we're going to take that long to get there. Perhaps we do. But if we do, we may have a corrective move first. In other words, perhaps this 5 relabels to a 3. We have another corrective move and then head up there. It's just difficult to imagine that it'll take that long to crawl up there, but anything's possible. And maybe that occurs. So the target's out quite a ways to hit the extended wave 5 target. We're only at a 41% extension right now. So we could go a lot further in the wave 5. But I think we'll have a little bit of resistance once we get up here towards that 550 level at the target price of that, pardon me, upward zigzag pattern. As a reminder, we had this symmetrical triangle. We broke out of it. That's exactly what's supposed to happen. Now, one of the cool things about this software, and if you haven't gotten it yet, if you've been under a rock somewhere, please go to hubb.com, hub.com, get it in beta form. We get meetings every week now from the programmers, updates from the folks at Hub, and there's just more and more cool features that are coming out. But you can get it for free now in beta. Nothing to download. It's all browser-based. I think most of you are aware of that by now, but if not, you're joining us for the first time. Again, welcome, and please go do that. We'll look at the live chart in a moment, but just the point I was wanting to make is the Elliott wave rules for these corrective triangles is at some point in time, you come back to the point of that triangle. And I think we have to keep that in mind. Now, that could be down the road. It's the same type of rules as we have when we have gaps that get filled. We know that based on our AI data, 94% of gaps get filled. Not all of them, but most of them do, but we don't know when, right? They could get filled immediately, as some do, or it can take quite a while. Same thing happens with the retracement back to the point of these triangles. So we do have to be aware that there's a possibility we see the 510 level. Could that be after the election? And we have a little bit of buy the rumor, sell the news. If the Fed actually ever does get around to cutting rates, more Fed speak today saying they wanted, I think it's Waller came out and said that he wanted to see several months of encouraging data before they even start discussing another rate cut. And so we're just leveling off now. But once again, as long as we stay above that wave 3, as long as we stay above this line of resistance here and consolidate there, you have to stay long. the markets. If we were to break back below that level, then we have to reassess things and re-look and see where things go. I did want to show you the intraday chart. I watched the 3-minute chart, as most of you are aware. And if you see this little thing down here where it says you need more data points, all you have to do is condense the chart down. I have 610 set as the amount of data needed for Elliott wave to show up. And there you go. So once you give it enough data, then the Elliott wave count pops in. You can hit the expand button there, which is a plus sign, or you can just hit this reset button here, and it'll take you back to the spacing that you normally look at on your charts. You can see that we did have a little bit of a blip down earlier. This low here intraday was right at the 61.8% level, and we bounced. But now we've broken that level. Now we're down here at the 70% level, so that's in danger of this intraday 5-wave pattern becoming disqualified. Right now, it looks like we want to rally into the close, but if we break much lower than that, all bets are off. Note that in Elliott wave rules, for those of you that may not be real adept in them, the wave 4 is still technically, by the letter of the law of Elliott wave, okay until we hit that 78.6% fib retracement, but Elliott in his works would always be concerned if the corrective move, whether it's in the B wave of a zigzag or the wave 4 of a 5-wave pattern, got to 70%, he felt like that gives you a greater chance that that pattern is going to become disqualified. So he was concerned once we got to 70%, albeit knowing the rules, that 78.6% still counts. It's a fib level. It's kind of the same thing in his writings where he didn't really believe too much in a 23.6% fib correction. He felt like that was more of a corrective move within the impulse, but not enough to warrant a zigzag pattern or any other sort of corrective move. It was just a move down and we would continue back up in that same impulse. So those are two things from his writings away from the hard, fast Elliott wave rules. So we did bounce from that 70% level. As you can see, we're just trading through for the past basically hour or so. This goes back to yesterday when we started this wave 3. Just go back to consolidating right around this 10, 30, and 50-day moving average. So all this stuff is on the intraday chart. So basically not much has happened today other than a little bit of a blip down, a couple little blips higher. But that's where we sit on the intraday chart. So let's go back and look at the daily chart. Not much else to say here regarding the SPY. So let's take a look at some of the other markets. Before we get to those, we'll take a quick look at the TNX. It is starting to move back up a little bit of a blip higher in rates. I think that's a concern as well. In the U.S. market update, the headline was that we have confirmed the wave 5, but we still need to be cautious. And the wave 5 being confirmed was because the wave 5 on that SPY chart was in purple. If the account or the algorithm was doubting that wave 5 was the current wave, it would have stayed green. So at any point in time, that wave 5 could end. So that's why so much importance to look at that support line that I was showing you. So the concern here is that this is a pretty darn well formed 5-wave pattern on the TNX. And I posed the comment or the question in the U.S. market update as to I don't see what catalysts could drive rates up there unless we start to get some really hot inflationary data. I don't think the Fed wants to move. You've heard me say that over the last, since the CPI report came out, that the Fed wants to play politics. I think they would like to just sit on their hands and do nothing until after the election. I think that would be their preference. However, if their hand is forced, I wouldn't be surprised if we start hearing the whisper numbers of a rate hike again. But before that happens, we have to have some much worse economic data than we had last week with the PPI and CPI reports there. So for now, we have to keep an eye on that. Certainly a move up further in rates, even if we got back to these wave 3 highs here, back over here, then that would be a big negative I think for the equities market, maybe we can handle at least a move there. But if we break that wave 3 high and we start thinking maybe this is a wave 5 to the upside in rates, that would be a problem. And then we go look at the dollar and we have almost the exact same pattern. 50% retracement on the wave 4. I didn't like it when the dollar got up here towards those previous highs. As you can see, if we go back over to November, that's kind of where we were. Bringing the chart back. It's wave 4 right at 50%. Same scenario here. We don't want to see a big increase in the dollar. Also would be difficult for the equities market. We probably wouldn't see that reflected until next quarter's earnings. We're right in the middle of earnings season. As Ag mentioned, all eyes seem to be on NVIDIA's earnings after the close tomorrow. So we will look at a chart of NVIDIA. I'll beat you to that. I'm sure somebody was going to ask about it in the Q&A, but I'll show it to you even before we get there. But if we start to see rates go up, and that would likely propel the dollar higher, those are both negatives and would be concerns for holding above that resistance level on the S&P. So if we look at some of our other markets, we look at the Dow through the DIA, same scenario here, but notice we're kind of testing that wave 3 high. But if I bring this arrow back, you can see that we are still sitting above that area, but we don't have the luxury of a little bit of room above this level like we did on the S&P. We're right on it. Same scenario, though. This is a little consolidation and testing what once was resistance to see if its support is okay. It just has to hold right here. We are allowing that 10-day moving average to creep back up, but we have to hold above this 400 level, this big round number. Again, the wave 5 in purple. So we are in a confirmed wave 5. So that means it could end at any time. So we have to keep an eye on that. And that's why we said caution is still important in the U.S. market update. So we broke above the wave 3 highs. We're confirmed in a wave 5, but that does not guarantee that we're going higher. And watching the dollar, watching rates, making sure that we don't continue to move higher is going to have a lot of effect on where we go, not just on the S&P, but on the DIA here as well. Taking a look at the Qs, obviously, when you look at the Qs, you would think they're probably going to have a little more of a struggle than the other markets if rates are creeping back up. But so far, okay. We got a little bit of a bid back into some of the big tech stocks. I don't know if we're going to see the runs like we did before, but at least we got a little bit of a move higher, and we are holding above this resistance level at the 450 level. So that high, I drew this arrow because that's another cool thing about the software is it reminds you of what you've looked at in the past. You don't have to go back and redraw all the lines. This is just from our discussions that we've had in these events in the past. So it reminds you of where you were, and you can see how the patterns played out based on the commentary at the time that it occurred. But I made a note that this wave 5 is already pretty extended. We're at the 138.2% fib extension here on the wave 5. Still a little bit of separation, but the key level to watch on the Qs is can we hold above this 450 level? And it gives you this little dot over here, this little arrow, which tells you exactly where the market's trading right now. And if the market is up, it's green. If the market is down, it's red. So as soon as you bring the chart up, you know if you're having an up day or a down day. So I hadn't mentioned that before, but that's kind of a cool little feature that adds in here. Not that big of a deal. You can look at the chart and see whether it's up or not, but it's kind of cool to know immediately when you bring a chart up if we are having an up day or a down day. And so if we also take a look at the IWM, that's the one that's the most interesting, I think, because we're underneath the resistance level where the other markets, the S&P, the Dow, and the Qs have broken above their resistance level. We've not been able to do that yet on the IWM, and we're right back at that 210 level, which we all know, if you've been watching, has been resistance in the trading range that the IWM was in for quite a while and has been once again for the entire year of 2024, staying in that 190 to 210 range. And if we can break above that level, we start a new range. The IWM likes to stay in these 20-point ranges, so you can almost set your clock by it. We had broken down to 170 to 190, as you know, and then back here, we had broken above that 190 level and tested it here in January, once again in February. We tested it again in April. So far, the 190 level has held as support, and we've tested breaking 210. This is the third time coming up. And just as a quick reminder, my personal mentor always talked about the third time a level is tested, the third time's the charm, so to speak, that whatever happens when you test a support or resistance level for the third time tends to happen or continue over the short to intermediate term. In other words, if we hold as resistance here and start back down, there's a high likelihood we're on our way back down to the point of this triangle, if not all the way down to this support level. However, if we do break above 210, then we're likely to continue higher. So whatever happens, the third time you test a support or resistance level is normally what the next short to intermediate term directional move is going to be. So watching this really closely to see if we are able to break above the 210. I say this over and over again. I repeat myself a lot, but I do that for a couple reasons. One is to emphasize the points, the rules that I follow, to share those with you. And the other is because we constantly get new people and they haven't heard it before. So if you've heard it 15 times, just bear with me, catching people up to date that haven't heard those rules before. So all eyes for me, not just on NVIDIA, but the IWM. A lot of people, myself included, feel like the small caps are a good testing ground, if you will, for risk on, risk off, risk tolerances of the market. And if the IWM, if the small caps are doing well, normally that means the entire market in general is a risk on or a bullish scenario where if the IWM is not performing well, it's more risk off, or we could be looking a bit more bearish. So it's kind of a good indicator of where the viewpoint is of the market in general. So we'll keep an eye on that. We should look at the VIX. I did forget to put the VIX in, and y'all called me out on it in the market update. I forgot to put that in over the weekend. And there was some comments that, don't you think the fact that we're down here and you can see how long this has been support down here around the 12.5 level on the VIX, once again, for the entire 2024, we've had this, we moved up. We tested that resistance area on the VIX going all the way back to October, up here just below 22.5 in the 22 range. So we've kind of almost been a bit range bound, even though in the midterm we had this trend channel to the upside. We had a little breakout here that didn't hold, and we came back down and we broke to the downside again. I just want to remind everybody that just because we're down here at the lower end does not necessarily mean that the VIX is going to turn and move back higher, which would certainly be a negative for the market. The VIX is supposed to be just a volatility indicator, but y'all know how it works. It's more of a fear gauge because the highest percentage of the time when the VIX is going up, the market's going down, and when the VIX is going down, the market's going up. So it's more of a fear indicator than it is just pure volatility in the market. There is a rare time, doesn't happen very often, but an extremely rare percentage of the time, if we have just an explosion to the upside, you'll actually have a tick up in the VIX. That's how it's supposed to work, but it's more of risk on, risk off the majority of the time. So we have broken below 12.5 in the past. We've been down even below 10 if we've had a strong market rally. Can we do that this time? It's still possible, even though it may seem more conducive to a bounce higher in the VIX and therefore some negatives. Certainly, if we get rates to continue to move back to the upside, that would be a negative for the markets, and we'd probably see the VIX bounce and move higher. But for now, we're just sitting on support. It doesn't mean necessarily that we're destined for the VIX to move up. There is history that we could move lower. So catching you up to date on the VIX since I left that out of the U.S. market update over the weekend. Just an oversight. It will be back next week, I promise. So another one of the cool features in the software is we now have Bitcoin. And I know not everybody has that yet. We get it first. The programmers send it to us. So it's kind of a two-step beta form that we're doing right now. Anytime you create a new piece of software, as you know, there's going to be bugs. There's going to be things that need to get fixed. That's why it's in beta form. There's this support button over here on the bottom right of the screen. So if you see something that you feel isn't working, you can send an email to support. They prefer if you send a screenshot with it so they can see it, so that they know what's going on, and they'll fix it. But when we get these new data points, we were waiting a long time for the crypto people to get their software to talk to ours. So the programmers have worked that out. So we're testing it now. Then you guys will get it here very soon. And that'll be in the beta form as well before we move into the full release, or the hub folks move into the full release. We're trying to get above 70,000. We broke above it yesterday. We're kind of hovering in that range today. And this descending triangle, I just want to remind everybody that contrary to what you may read out there, a descending triangle does not necessarily mean a downside breakout. Any triangle can break any direction. Ascending, symmetrical, descending, they can all break either direction. So don't get caught up in that hype that a descending triangle means you're breaking down, an ascending triangle means you're breaking up. Either one of them can break either direction. So far it looks like we're making a nice move. Now you can see with that move yesterday, we did get a little separation from the 10-day moving average here. So a little bit overbought. So consolidating right here at this big resistance area around 70,000 is warranted. In fact, if you're long Bitcoin or any of the cryptos, this is what you want to see. You want to see some sideways consolidation here, allow the 10-day moving average to catch up, gain a little bit more momentum and energy, and then break above resistance. And if you're all wondering why, it's because of exactly what happens over here. You've heard me say this numerous times as well. You don't like the vertical moves, because when it goes vertically up, oftentimes comes vertically right back down. So we've been doing that a fair bit here with Bitcoin. We've been having these big moves. You don't want it to break resistance when you're already overbought, because the likelihood is it's not going to hold. So if you're long this market or any of the cryptos, which Bitcoin is still, even though there's thousands of other altcoins, et cetera, out there, Bitcoin is still the king. It's still Big Daddy. So most of them follow along with what, with some various daily exceptions. I think Ethereum is still doing well today, so I'm sure that puts a smile on Zach's face. But we're consolidating in Bitcoin, but this is ideal. This is what you want. You don't want to see it come all the way back down. We do have this positive cross here between the 10 and 30-day moving averages. So that would be a signal that, hey, we're likely to continue to consolidate here and then make the break. I like to put the ADX on when we start to look at that, and you can see the ADX is setting up rather nicely. We have the positive directional indicator moving up, the negative moving down, the ADX moving up. Remember, the ADX simply measures the strength of a trending move. It doesn't mean if the ADX is going up that the market's going up. If we were in a downtrend, the ADX would still go up, because it's not telling you direction. It's telling you strength of the current directional move. It's these two directional indicators that tell you who's in charge, the buyers or the sellers. And as we consolidated, there was some period of time here where the sellers were a little bit in control, and now they've given way. We had the crossover here. So the bulls are in control on Bitcoin. So that DMI would be suggestive that we do continue to consolidate here, and then at some point in time, try to break above that 70,000, and we'll be in clean air. I always use the racing analogy. If you're running out front, you have the cooler, clean air coming into your engine. If you're in the back of the pack, you got all the exhaust and all the little rubber pieces coming off of other tires to make your engine run hotter, a little bit tougher for to gain as much speed. So when you're out front, the clean air, that works as far as breaking above resistance. You're in clean air, and you can get exaggerated moves once you break above a major resistance point. So let's watch Bitcoin over the next few days and see if we do continue to consolidate and then make that break attempt to move to the upside. We'll probably talk about UNG and oil in the Q&A, but I'll just go ahead and show you oil now. We at least had a little bit of a tick back down today in oil. We're staying in this expanded triangle. I used to say the rare expanding triangles, but if you've watched a lot, you've heard me say this a few times as well, that over the last couple of years, I've seen way more expanding triangles that I've seen in the previous 20 years. It used to be rare that you would see one, but they still work the same way. It's just the points on the left side and the mouse on the right side, the opposite setup of what you normally see with a symmetrical triangle. But nonetheless, it still lends to a breakout. So which way are we going to break out in oil? I think the likelihood is that we move higher. You know, again, if you've been watching, that we completed this absolutely perfectly set up zigzag pattern to the downside, 61.8% B wave correction, yields a 100% extension. That's exactly where we went. And now we're forming this triangle. So we went up to the top of it, couldn't break out. And now with a little bit of a tick down, we're still right in the middle of the mouth of the triangle. So we're going to get a breakout in oil. There's no way to know which way it's going to be. We have a 50% wave 4 correction. So once again, you would lean towards an upside breakout. But Elliott himself also said no matter how well the 5-wave impulse pattern is set up, when you have a triangle, you don't pick a direction. So you don't lean towards, we're going to the upside. We can break either direction. I think there's less likelihood that we break lower just based on what OPEC has said. But if consumer demand falls off a lot, we could break lower. I don't think they'd let that happen for too long. They've said they've seen the end game. They know that there's a limited amount in the ground, and they want to make as much money as they can. So if we do break down out of that descending triangle, I don't think it would be very long before we start hearing production cuts out of the OPEC nations to try to get the price back up. So far, we're holding right here in this 75 range, which has been a point of support resistance. And we also have that wave 4 right there at 75 as well. So that's right where the 100% extension was, 50% retracement. It is a very good spot for oil to break higher if it's going to, but we just have to respect that it could go either direction. Let's go ahead and look at some of our recent case studies. We'll do one today, and at the end, Zach will show you how to post your own idea, which I think is fantastic here. I think it's a step above all that Reddit meme craze stuff, because you can post an idea, and rather than just being in some sort of a chat room with followers, you can have your followers here, but people can vote on your idea. And I think that's kind of neat. You post an idea and you're curious what other people think. They can come in and vote. Do they agree, disagree on your idea? And it gives you a chance to post as well. Zach will show you all that stuff at the end, as I said, however. But that's what's going on with oil. So still in this expanding triangle, waiting for which direction we're going to break out. Before we take a look at those case studies, let's just go ahead and bring NVIDIA up. And my goodness, couldn't be more set up for what in the world is going to happen with NVIDIA after the close tomorrow with their earnings. We've had a little bit of a run up to them, and we're right at that wave 3 high resistance. Can NVIDIA come in with strong enough numbers to break above that resistance? We are at a fib level here, the 38.2% wave 4 correction. We've run right back up to resistance. Nice consolidation here going into earnings. There's the 10-day moving average, not a lot of separation there. So we're primed to go either way on NVIDIA's earnings. If we break above that resistance level, we are set up for a continued move up to that wave 5. We take a look at the DMI. It's been kind of ho-hum, and I would create a little caution here on stepping in front of NVIDIA's earnings report. Let's let it see what it does. Probably it'll be a pretty volatile move one way or the other after earnings, but the ADX has not responded at all to this move off that wave 4 low. And it being only a 38.2% correction, we could come down and set a new wave 4 low if it's a disappointing earnings report or if the market doesn't receive it well. I would have preferred to see this ADX move up a little bit. You can see by the directional indicators, there's the slightest of lean on the bullish side, but the ADX has not given any sort of a tick up. And there's enough data there on this move off that wave 4 low that the ADX could turn higher. The reason I say that is the ADX is a bit of a lagging indicator. The two directional indicators are more responsive to the day-to-day movements. And that's why I also like to look at the CCI. When you create a trading system, you want your technical indicators, your confirming indicators to complement each other. So if we talk about how the ADX can be a little lagging, we offset that by having the CCI, which is like the two directional indicators in the DMI, far more responsive to day-to-day moves. And I really like the way this has been programmed in the new platform. Before we just had the lines, but now you can see if you break from the range that CCI says the majority of the time you stay between 100 and negative 100. That's kind of just the almost sideways viewpoint. If you break below negative 100, it's bearish, as evidenced by the move down to the wave 4. If you break back above positive 100, that's bullish, as we've seen in this run to the upside here. But note that we're just kind of flat. So again, ever so slightly bullish lean on this move to the upside. But it seems like there's some concern about NVIDIA's earnings moving into their release tomorrow. Again, it's after the close tomorrow. So by the time we talk again with the weekend update for our alert subscribers at EWOTrader.com, we'll definitely be talking about this Thursday night. Probably be a big headline. So not much else going on right now other than what's happening here. Is the AI stuff still going to be strong? They had a surprisingly good, to me, earnings report last quarter. Can they do it again? We'll find out tomorrow. And then for our case studies that are still considered to be open, you can see them on the platform. If you go to the TradeFinder page, TT or Trading Technologies has done pretty well. So nice little movement. We're almost at the price target. We got really close right afterwards. We're almost there. So far, so good here. Note on the CCI that we had a little bit of a dip back below positive 100, and we're turning back to the upside. That would be suggestive that we are going to hit that target, so that one may come off here pretty soon. So that one's been working out well. What hasn't been working out so well is AXTA. I did want to show you this. If you have the software and you've noticed this and it bothers you, remember when I was just talking about you send a ticket to support and send it with an image? I switched over to AXTA over here, but notice still says Train Technologies up here. That's a little bug. They're aware of it. They're fixing it. The chart is AXTA. You notice that the chart changed. But if you have this occur, all you have to do is come over here and hit the refresh button. And if you hit the refresh button, it'll reset the chart and the AXTA will come up. It doesn't bother me because I know the chart's correct, but if just not having that name, see how it now says AXTA up there? If it doesn't have that name up there and that bothers you, just hit the refresh button and it will fix that. That's all you need to do. And you can come over here and go into changing the appearance, and that gives us the bigger numbers back over here on the side. That doesn't matter when you're looking at it on your own, but when we do these broadcasts, I like to make these numbers bigger, the dates bigger, so it's easier for y'all to see on the screen. So that's the setup here on AXTA. We had that 41, so 38.2% corrective move there. If we look at the moving averages on AXTA, we are breaking down below that level of the 10-day moving average right now. So what we want to watch is, can we hold this wave A high? We're right there. If we break below that, well, then you know what might be next. We do have some more support there where we tested that wave A high back in April and dropped down. We broke above it, so broke above resistance. Are we just testing that now? Are we just testing that as support to move higher and finish the C wave extension as expected? Again, you can make a case for that oftentimes, especially when you have this vertical stuff. Once again, another reason why I hate it. You come back down, testing what was resistance to see if its support is all normal. Just have to watch this. Would have preferred it to continue to hold above the 10-day moving average, but yet we still have the fact that we're sitting on top of these two highs here. And then the last point I was going to make is if we do break below that, then we may be looking to come down and fill that gap. So we would exit that one, just take the loss and go. But we're not there yet. We have to wait and see how we handle this level right here in the 35 range. So we'll keep that one for now, as long as we stay above the 35 area, and then look to continue to move upward. Hopefully, if this level holds, once again, if it breaks, you just take that out and move on. And then the one that we did last week, we've already closed this out on SLV. Big, huge move to the upside here. And we took out that wave A high. You can see where we were. Big move here. So I know a lot of you enjoyed that. You made comments on the U.S. market update. That was a great one. Love it when they break fast like that. It doesn't always happen. The market moves in impulses and corrections. That's the whole crux of Elliott wave. To me, it's the best indicator of that. I know some people say negative things about Elliott wave because the charts tend to relabel. And I've always said that it's not a bad thing. That's a good thing. The markets are dynamic. They're not static. You need an indicator that's as dynamic as the market is and is responsive to trying to reassess what's going on currently, because all we can do is trade on the data that we have at that time. So I love the fact that we can see some relabeling there. It makes you quick to make an adjustment to a trade. We talk about that all the time at EWOTrader.com with our alert subscribers, specifically on Thursday nights. So we got a little bit overbought here, and we'll wait and see if we come back down. Still pretty good separation here between where we are and the 10-day moving average. So we did the SLV instead of GLD because GLD had moved ahead. We didn't have that big spike up on silver yet that we had on GLD, or at least in the SLV. We got that. It's caught up. So they're kind of the same now. Well, we've talked so much in the past about how in the old days gold was the leader. Silver would follow what gold did. And then for a while it seemed to flip-flop where silver was the leader. Now it seems like gold is back in control here and silver's following. So that was the reason that we went with SLV, and that was the right thing to do. So that was a great one. That one's already been crossed off. That one's done. So the only two that we have left now are TT and AXTA. So hopefully you follow that one and enjoy that move. So that worked out extremely well. All right, so this week's case study, and as I said at the end, after we do the Q&A, we'll get Zach to come back and show you how to enter it. But we're going to look at, there isn't any sort of a signal from the AI today. Didn't find anything that had a high enough rating to where we would want to talk about it. We did talk about this yesterday with our EWO Trader Live. That's another live show that we do for alert subscribers at EWO Trader. Again, another time that we talk to you live during market hours. Thursday night is in the evening. So we try to set these in different times for people's schedules. But we want to talk to you as often as we can. You can see that we've kind of had this move to the upside here on GDX. So this is the miners. And they haven't quite, they're kind of moving here, but they haven't quite had the same move yet that we had on GLD and SLV. So feel like that the miners will play catch up here. So this is a very similar thought process to what we did last week, thinking that SLV would catch up. I think the gold miners will catch up. I don't really see an ending. People are like, where do you think gold and silver go? Well, I don't have a crystal ball, but just my opinion, whatever it's worth. In the current market that we're in, with the amount of debt that we have in the U.S., we've been through all that. I don't think the moves in gold and silver are over. They just got a little bit exaggerated. They need to rest a bit. And if we do get a pullback in SLV, perhaps we look for another entry, come down and fill that gap that I showed you, et cetera. But our case study is going to be for GDX to move higher. If you want to know where our price target would be, we can look at this most recent zigzag pattern. We had one here, but this is a complex A wave. So we'll look at this and right at a 50% corrective level. So the target for GDX is going to be at 39. So we're going to post that as our case study consideration for today, an expected extension on that zigzag pattern up to 49, completion of the C wave. Our stop would be, just as we just talked about, if we break down below this A wave high, broke below this 50% extension level, then we would exit that position. So that would be where we would stop. You can see how we kind of bumped our heads against it on the way up. So it should act as support if GDX even pulls back a little bit more. Right now, we're just consolidating this move, but I think there's more here. I think the miners will play catch up to what the underlying metal gold has done. And that's what we're going to look at for our case study consideration for today. So with that, Zach, let's take some questions before you come back and show the folks how they can post their own ideas.
Sounds great. Yeah, that was a wonderful session there, Rob. Thank you for another informative start to this week. Let's go ahead and start out with Hood. That should be an exciting chart to go ahead and start us off.
That was asked about in the U.S. market update. And as a reminder, if you go to the U.S. market update, if you haven't already, we're giving away a free subscription to our level 3, which has to do with impulse trades, AI-based trades. We didn't have one of those today, but we have a lot of them. Our triangular breakout strategy, which is a volatility strategy, which you're probably going to see a lot more of those with the lower VIX while the market figures out where we're going to go from here. And then we also have the sideways strategy, the time strategy, also AI infused. It's more of an income strategy, more along the line of doing a calendar spread or butterfly, something along those lines, designed to generate income. We're not trying to pick direction there. In fact, we're wanting the stock to stay sideways. The AI helps tell us. So anyway, all you have to do is post a comment under the video and you're registered for the giveaway each and every month. I read every single comment. I answer as many of them as I can, time and travel permitted. And I saw this. The question was asked about Hood. So I'm wondering if it's the same person asking it or if other people have the same thought. I've always said that if one person asks it, there's probably more people thinking it. So when we look at Robinhood, they had surprisingly good earnings report. I think they shocked a lot of people with their earnings report. That allowed them to break above that wave 3 high. The problem here is we're just a touch extended, once again, from the 10-day moving average. So it would be best if you're long Robinhood. We're only at a 39% extension, so we can go further, but we bumped our heads at that 38.2% extension. Perhaps we even come back down here towards 20 and test that wave 3 high. Same scenario here that we've been talking about, except for the IWM. Most things are above the recent wave 3 highs, and now we need to see if that holds as support for moves higher. And that's exactly where we are with Robinhood. Broke above that level, some consolidation here. Let that 10-day moving average catch up, but let's hold above 20. As long as you stay above 20, I think you're long this stock. If it breaks below 20, then you have to exit because there isn't much to hold it. We had a pretty quick move up from 17.5 to 20. If we break this 20 level, along with the fact that it was the previous 3 high, we probably come all the way back down to 17.5. So as long as we stay above 20, I think you're good here. But understand if we go sideways to slightly down over the next few trading days, that's all completely normal.
Thanks, Rob. And so I just wanted to take a moment to remind everyone, I dropped it a bit earlier in the chat, that we are transitioning away from from Zoom to YouTube and the multiple streaming platforms that we stream to in addition to Zoom. There's just been a number of reasons and metrics that we've analyzed to come to this decision. It just makes the most sense. It's going to be most efficient for everyone. So again, I'll send in the information around that in the chat there. We already had some subscribers come back saying that they registered and subscribed to the channel. So thank you so much for that. That's exactly what we're looking for, and that will make this process as smooth as possible. So we're looking to roll that out. I believe June 4th will be the first TradeFinder that will be solely on YouTube and our other streaming platforms. But other than that, let's get back to the questions. Jerry here says, just got an alert to sell Chegg Calendar 205. Thinkorswim is 0.025. So maybe this is a question you might want to take in the insiders meeting, or
I don't know what you're looking at, because we had a short May put and a long June put. The May is over. We've passed expiration, so there is no May option. You either got to sign the shares and we're told to sell the shares, or you bought it back on Friday if you weren't assigned. And then the directions, the comments was to hold the long 6 put because we weren't able to get back above 5, and we have continued lower. And holding that long 6 put has worked out well over the last couple of trading days. Specifically, yesterday had a big down move in CHGG, and that allowed us to generate a gain out of it. I know assignment issues scare people. It's no big deal. We talk you through it. So I'm not sure what they're looking at, but it should be somewhere around $2 on selling the long 6 June put. That's all that's left there.
No worries. Thanks for the insight there, Rob. And I just want to remind everyone to take a moment and hit that like button if you're enjoying the webinar so far. It was a long way for Rob and our algorithm, of course, and it's a great, quick way to support us. So let's go ahead and go over to Mr. Softy.
Oh, we haven't looked at that one in a little bit, so that's good. I like how you've gotten up with the past nomenclature there, Zach. With we used to call it Mr. Softy. People don't really call it that anymore, but we always talked about it that way. Really nice setup here on Microsoft. The wave forward right at the 61.8% corrective level. We have that bullish 1030 cross there. We are up against resistance, though. So as you know, I usually try to give both an aggressive and conservative view when we see things like this. Looking at let me put the DMI on here. It's pretty constructive. Let's see exactly where that ADX is.
I think we went to MicroStrategy instead of Mr. Softy.
Okay, well,
I might have tripped you up. Sorry about that.
No, I'm sure I typed it in wrong because I've been watching MicroStrategy, so I probably have that on the brain. Well, let me finish MicroStrategy and then we'll go to Microsoft. Sorry about that. It's on my brain following the whole crypto thing. Well, on MicroStrategy, if anybody's interested, that ADX is turning up above 20. We're separated between the two directional indicators. That would be suggestive that we are going to break above that previous wave 3 high. I think we'll need Bitcoin to break above 70,000 for that to happen. Right now, we're consolidating as the 10-day moving average catches up. But it's a good way. MicroStrategy, they're so heavily leveraged against Bitcoin, as you probably all know, that as Bitcoin goes, so goes MicroStrategy in these days. So let's look at Microsoft. And we'll just a little bonus there on MicroStrategy. Microsoft has broken above the wave 5. The concern here is if we look down at the ADX, we have not broken above 20 yet, and we haven't broken above the negative directional indicator. Now, it's looking like it's setting up to do that. And if you looked at that, you could say, oh, okay, well, we're probably going to break up above it. We're getting the good separation here. But just look what happened before. And this is why I always say you have to let it happen. We had separation between the two directional indicators here. The ADX got right to 20 and just went dead sideways. Couldn't break above it, went lower, and we've just been playing around that 20 level. We need that ADX to break above the negative directional indicator and to clear 20. If it does that, it's suggestive that Microsoft will continue higher. We have broken to a new high here above this resistance area at 425, so it looks like it wants to go higher. But I would say that let's let this set up. There'll be plenty more time for this if the ADX does get above that negative directional indicator and breaks above 20. You'll have plenty of time to trade the extended wave 5. So for now, when you have this, at least for me, It's a big confirming indicator for Elliott Wave, and the fact that we broke above that 425 level. It's just one day, so we haven't had a follow through or confirmation day yet, and we don't have that ADX where we need it yet. If both of those occur, if we get the ADX to break up above 20 and the negative directional indicator continues down, and we get a follow through day on that break above resistance at 425, Microsoft will be off and running again. And that may very well happen, but it's not there yet. So just be patient here. If you're already long this stock, then okay, go ahead and stay long as you stay above 425. But if you're looking to get in, I'd wait. But if you're already in, you can stay there. Let's see if the DMI cooperates, the ADX specifically, and if we hold above 425. And if we do, we're good to go there. So, yeah, looks like it could be good, but we're not confirming it from the DMI yet. And that's part of my technical trading system. Love Elliott Wave. I think it's the best single indicator out there. But when you're building a technical trading system, I don't think it's smart for anyone to rely on one single indicator. You want a technical trading system. And so we have that, and we've added in AI on top of it to supercharge it, if you will. So that's Microsoft.
Very well said there, Rob. Let's go ahead and check out RMBS. And so we're going back to the semiconductor sector, and that's for Bravo.
RMB as in boy, S?
Correct.
Good old Rhombus. Gosh, I haven't heard this stock in a really long time. Blast from the past. Pretty interesting chart. We have a ascending triangle here, unascending triangle. Right there, you can see that level of support resistance through 60, and then a pretty nice set here of higher lows. So there's your ascending triangle. The bottom of the triangle is around 52, 60. So you're looking at an 8-point breakout move that's coming here. It does look like the wave 5 may have completed. And if it is complete, because it didn't extend more than 100%, the expectation would be then to go back to the previous 4. And isn't it interesting that that's exactly where the 8-point breakout would be? So if we do get an upside breakout on Rhombus, and maybe NVIDIA helps them, if they have a good report, we do get the upside breakout. I think we go back to that previous 4. There's your 8-point move that's forecast by the triangle. All that makes sense. It seems to be wrapped up in a nice, neat little package there. But as I've often said, you don't always get perfect setups. And even if you do, they don't always play out. We still have to remember that rule that I talked to you about earlier, that just because this is an ascending triangle does not guarantee that upside breakout. You would lean that way, but with the ADX confirming the consolidation in this triangle, meaning that the ADX is very low, that's what you want when you have a triangle. You want a lower ADX because that confirms consolidation. You've been consolidating for a while for the ADX to get that low, and it normally yields to a breakout. And when you have a breakout, you want the number of points to be 10% of the stock price. So we're looking for an 8-point breakout on a $60 stock. So 8 points is more than 10% of 60. So maybe even a strangle here would work. I don't know where the option pricing is here. I don't know if you can construct a good strangle. We'd have to look at the implied volatility. They may have pumped some into it because of NVIDIA's earnings, which would negate that. You don't want to overpay for them. You want to get them when they're cheap. So I don't know if that's factored in, but I'll take a look at that afterwards, because other than that, it looks like a great setup. And it's also a stock that can move. So really good on whoever asked this question. We haven't looked at this one for a while, but it sure allowed us to cover a lot of rules going through and looking at this chart. Very cool. All right, let's do one or two more and show the setup. GDX. Sorry, I didn't mean to talk over you, Zach.
No worries. Yeah, so I give credit to Bravo Mo from YouTube there on the spot on Rhombus. That was an interesting chart to have your analysis on. Sorry, so you said one or two more symbols, and then we'll go through the case study consideration?
Correct.
Let's go ahead and go over to Rick from Zoom. I'd like to look at Oracle, ORCL.
Yeah, another one that we haven't looked at in a while. So kind of some of the older school stocks here. Everybody wants to look at SMCI and NVIDIA and all those. Nice move up in Oracle. Maybe some money is rotating. You saw Microsoft's chart. Maybe some money is rotating to the older big tech boys and some of the less, staying out of the less volatile stuff. We came down and filled that big gap up. We held right at the 61.8% correction. Now look at this DMI. That's what you want it to look like. That's what you want the DMI to look like. That is confirming this move higher. Now the negative side, and here's a good one for when I talk about being aggressive versus conservative. If you're aggressive, then I think you go long now. We got a positive 1030 cross. We are right at resistance, however, but that DMI is very suggestive that we are going to break above this wave 3 high and congestion at 125 and continue up to that wave 5 target. That looks to be in the cards. If you're slightly more conservative, we are a little separated here, so we might get a sideways or 2 day. That actually would be good for the suggestion that we're going to break above 125 and head higher in Oracle. So yeah, that's another cool one to look at. So again, if you're more conservative, let it actually break above 125 with a follow-through day. If you're aggressive, I think you can take a shot at it now. The problem is that if you go long now, you don't really have much in the way to hold it until we at least came down to the 50-day moving average. So you'd have to be willing to take a 4 or 5 point drop. If we don't break above resistance, that would be where the risk comes in. But the suggestion is from the DMI that we will continue higher. So another neat chart to look at. One more, and then we'll bring you in.
Yeah, with 1 minute left, we'll do this one last symbol here, and that'll be from J for PANW.
Well, we looked at that one yesterday in our Elliott Wave Option Live show, talking about the earnings, and lo and behold, they disappointed again. Let me go ahead and refresh, so if that bothers people, we'll get PANW up there, and down we go, but we've recovered that so far throughout the trading day. You can see where we opened down here, and that was where we talked about yesterday. Support would be down here around 300, and if we couldn't hold 300, we might be coming all the way back down to that 275 level. But we've maintained the wave 3. Now see the difference? See how it's green and not purple? The algorithm is telling you that the wave 3 is still on. That's the current wave that we're in. We'll look at the moving averages. We did break the 10-day moving average, but holding it at the big 300 round number and the 50-day moving average is pretty solid. I just don't know if this is some sort of a company-specific issue, why they're struggling. It just seems in this day and age where we keep talking about cyber hacking, et cetera, that they would just be exploding. They haven't done so much of that in their last 2 earnings report. This was the last one with the big drop. Now, on the positive side, if we can hold 300, maybe we're headed back up here. Maybe people will jump into it feeling like this one is underperforming. That's another thing that happens when you have a market that's had a run like we've had to the upside, is money rotates. There's some money rotating into more conservative sectors, as we've seen with the XLU, et cetera. But also, you're seeing money rotating into these older tech stocks like Microsoft and Oracle that we've looked at today. And you have to be encouraged by the fact that we bounced. The open was right there at 300, but we've bounced higher. So perhaps all's forgiven here, and money still is a believer in Palo Alto, and you have the possibility that we go up and fill that gap. We look at the DMI, see that's what happened. We have the positive coming down and the negative going up. That's a concern. But I think if you want to try to trade this long, as long as you stay above 300, you're okay. But if we break 300, it's likely we come down to 275 rather quickly. So if you're long this stock, stay long above 300, and let's see if we do go up and fill that gap. But it wasn't the big blast off move that was hoped for on earnings, but it didn't sell off hard either like it did on the last earnings report. So that's encouraging that it's held 300. We'll see where it goes from here. All right, Zach. So show the folks how they can post an idea. I'll post the GDX.
Yeah, that sounds great. I was going to say that was awesome, Rob. Very informative session. I know we just got under 2 hours left in the trading day, so I won't spend too much time. I know we all have to get back here, including myself and Rob. So real quickly, what we see here is a menu, a jumping off point of what the platform has to offer. And one of my favorite things to quickly go to here is the themes. This will give you an idea, maybe create some curiosity in certain sectors, or just also motivate you to look at different symbols if it's something you typically don't trade or anything along those lines. I feel like this is just such a great way to see what the community is thinking and also find ideas for yourself there. So again, we won't spend too much time on this platform demo today. There are more demos coming here soon. I do quickly want to show you here the difference between a post and an idea, like I have in the prior sessions. What we see here are posts, and essentially I like to equate post to a draft idea. So when we click over here on this light bulb for the ideas, we'll come over to all of the ideas here. And we can click new idea to create an idea, which is what we're about to do, or create a post. If we hit create a post, this is essentially a discussion board. It's a draft idea, as if you were not ready to fully execute the position yet. When you're submitting an idea, you can equate it to paper trading, as if you are fully in this position. All of the data is real time, real information. The whole transaction is complete real time, and is exactly what would occur if the capital you had on the line was real, if you had actual risk on the line. However, a post can be looked at as a draft idea, as if there might be some parameters that are not quite fulfilled. If there's certain things you're looking for a pattern to play out for until you might enter that position, then you'd want to go with a post. But for today, let's go back to the idea. Cancel, yes. And as Rob said, we are going with GDX to move higher. And I believe that target price was, what was that, 39, Rob?
Correct.
And so we'll type in the symbol here of GDX. Target price 39. Time frame on that.
Let's go 3 months. Let's give it plenty of time.
3 months. Again, quickly, just real to show everyone here, we have the preset quantities or intervals of time. If you need something more custom, you can go down to the specific day that you need. But Rob said 3 months here for this. And we will come back to make this pretty after this webinar excuse me, is complete. So I'll hit save as draft for now. And I'll be able to come back in here to my ideas and click on unpublished. And I will be able to then publish this idea with its full beauty once we have the time to add that to it. So again, this was just a quick demo. We're only 5 minutes after, and there's so much exciting content to cover around this platform. The overall feature functionality continues to grow. As Rob has mentioned, the cryptos are super exciting to have that only we have at the moment, but very soon we'll be able to turn that on for our subscribers, which we're very excited for. So we'll go ahead and wrap up this session at that, I think, unless Rob has anything else for you. We can't thank you enough for taking the time to attend live with us. We know how valuable your time is now, more than ever, especially now. And so we greatly appreciate you allocating this time to this session. Again, one final reminder, and I'll shut up before passing back over to Rob, is that we are moving away from Zoom completely. So I'm going to send that in here to the Zoom chat for registering and becoming a subscriber on YouTube, which we will eventually be fully on come June 4th. So back over to you, Rob.
Thanks, Zach. And just to echo that, just as we've grown in viewership and subscribers, just been having some headaches from Zoom. YouTube is much easier to work with, and I think everybody will find that it's a lot easier as well. So I second that. Go set yourself up on YouTube and be viewing that only in the future, and it's just simply because it's functioning better for us, and that's what it really amounts to. So I think this was a great session. Kudos to all of y'all that were watching. Those were some great symbols, and gave me an opportunity to share a lot of rules, etc. So Another great trade finder. Enjoy the rest of your week. Let's see what NVIDIA has for us tomorrow night, and we'll be talking about that for Thursday night's Insiders with our alert subscribers. So take care, everybody. Enjoy the rest of your day.